pension firms must give annuity buyers the top rival quote on the market to help them avoid shoddy deals under new rules starting today. Savers will have to be told the difference between a provider's own offer and the best available one, in pounds and pence annual income, from a comparison tool covering every firm in the market. Annuities allow savers to exchange pension pots for a guaranteed income in retirement, but poor value deals and evidence of mis-selling uncovered by regulators have given them a bad name. Today's rule change by the Financial Conduct Authority comes into force as annuity rates have finally started creeping up after years at rock bottom, following recent interest rate rises. The measure is aimed at ensuring older people realize how much they could gain from shopping around for the maximum income to see them through retirement, rather than just accept a potentially disadvantageous one from their old provider. However, the new regime has come under attack because providers can choose to calculate a top rival quote using basic information such as date of birth and pension pot size, or on fuller data including health and lifestyle that could get people a better deal. The measure was originally planned for last September, but regulators agreed to give pension firms more time to prepare. The FCA's template for when a provider's own deal is worse than the top rival quote is below. A slightly different template must be used if a provider's deal offers the highest annual income. If a recent improvement in annuity rates is sustained, this could encourage people to reconsider them as a way of generating a guaranteed income in retirement. Since pension freedom reforms, it has become far more popular to keep pots invested in financial markets and draw down an income, despite the risk this involves of a retirement fund going down as well as up. Annuities are products that convert pension savings that workers put aside for old age into a regular income, which is guaranteed for life. Many people still simply opt for the annuity offered by the firm with whom they have built up a pension. However, it is possible to shop around to get a far better deal. Savers who are in poor health are also often eligible for an enhanced annuity, one that pays out a higher sum every year, because it is likely they will not live as long as other retirees, and so their savings need not be spread as thinly. Annuity providers have come under fire for years for alleged failures in sales practices that lead to savers mistakenly buying unsuitable products that don't take account of their health or provide for their spouse after death. Annuity deals are low value after years of rock-bottom interest rates, rising longevity and declining purchases. But interest rate rises in the UK and US have pushed up returns from government bonds, and therefore annuity rates. Meanwhile, a slowdown in the rate that life expectancy is improving could also help boost annuity deals. The latest continuous mortality investigation, which pension firms use to make assumptions about future mortality rates, found that average mortality improvements over the 6 years since 2011 are significantly lower for both men and women than for any other recent 6-year period. Tim Gordon, chair of the CMI Mortality Projections Committee, said, "There is much debate about the causes of the slowdown in mortality improvements, whether the low improvements will persist, and for how long." However, there is general agreement in the industry that the numbers are now reflecting a trend as opposed to a blip. Overall, mortality is expected to continue to improve, but the model suggests this is likely to be at a slower rate in the next few years than in the first decade of this century. The continuous mortality investigation is owned by the Institute and Faculty of Actuaries, a Royal Chartered, not-for-profit, professional body. Nathan Long, senior pension analyst at Hargreaves Lansdown, said of the FCA's new annuity rules, weighing up your options at retirement is absolutely crucial, and this is especially the case when it comes to buying an annuity. Last year, the FCA found 80% of people who purchased an annuity with their existing provider could have found a better deal on the open market, so anything that encourages shopping around is welcome. More than half of people opting for an annuity receive an improved income because of health or lifestyle, but the new rules are fairly flimsy on this point and are not offering the same level of prompt. It remains to be seen if these new measures create a frenzy of annuity activity, but with rates at a 2-year high, their introduction is certainly timely.